Hi there traders, and welcome to our regular weekly MacroWatch update. And here we're going with, is the bear market rally top in? Is the bear market rally that we've seen in stock indices and stock markets since March over? And are we now looking for a deeper correction phase going into the second half of this year, certainly going into July, with US COVID-19 cases weighing on riskier assets, weighing on stocks and shares and those global stock averages. And then we're going to take a look at the week commencing the 29th of June 2020, what we've got coming up into the end of June and for early July. So let's take a look at the macroeconomic and geopolitical developments over the past week first of all. Well, markets are caught between two conflicting influences in here right now. Positive economic data, strong demand from the retail market in here for stocks and shares. This day trading phenomena we're seeing going on right now. So we're seeing that pushing stocks and riskier assets higher alongside the positive economic data. And also we've got that ongoing support from the authorities, from central banks, from governments. The concern is now the rise in COVID-19 cases, either continuation of first wave or second wave. However we look at it, that is a real concern for global financial markets. So the global data continues to remain broadly supportive. We're seeing most data in here beating expectations. And the standout last week was the global market PMI data, the flash PMI data that we had for June, beating expectations pretty much across the board throughout Europe and in the US. However, on the other side of the coin in here, we had the COVID-19 cases are on the rise globally, and the particular concern is the rise in numerous US states. You can see those southern states in here, California, Arizona, Texas, Florida, of particular concern. It's really concerning markets in here, particularly as we start to come out of lockdown. Are we going back into lockdown? Some states reimposing lockdown measures in here. President Trump, however, saying that we will not go into a new lockdown phase. However, it seems that some states are already starting to do that, given the concerns in the rises in the number of cases, the rises in the number of hospitalizations over the past few weeks in here into the second half of June. And it's not just in the US. We've had new COVID-19 outbreaks also seen in Australia, Japan, Beijing and Germany. In Germany particularly, we saw the R rate spike significantly higher. In the UK, lockdown rules, however, are being further eased. We had an announcement this week that from July the 4th, we're going to see pubs, we're going to see restaurants, and we're going to see cinemas starting to reopen. Far more reopening and unlocking of the economy. However, this past week has shown the dangers of what that can create in here, with many people flocking to beaches during the very hot weather seen in the UK over the past week. Also saying with the UK in here, Michel Barnier, very downbeat on Brexit trade talks in here over the past week. The ongoing Brexit trade talks, which need to be concluded at the moment by the end of this year. And so how has all this affected global financial markets? Well, we've seen equity markets dipping lower. They're still very much caught between the June extremes. The June peaks in here, the peaks of the whole rally in here, looking at the S&P 500, and those swing lows, those lows we saw in the middle of June. But markets throughout last week more negative within those ranges and threatening topping patterns. If we take out the June lows in here for, say, the S&P 500, it all starts to look far more negative. Similarly here with the DAX, kind of sideways in here over the past week or so, and again caught between those June extremes. However, a more negative tone certainly looking to come through, and potentially again a topping pattern going in. On the FX side, if we go and look at the Forex environment in here, the US dollar stays relatively firm. Again, it was kind of sideways last week, dipped lower, the dollar index dipping lower at the beginning of the week, but then rebounding into the end of the week in here. And that reinforces the rebound that we've seen throughout June. So this US dollar strength in here, again, US dollar at the moment very much being seen as a safe haven, reflecting potential for us to go more into a risk-off phase as we go through late June into early July. And we're seeing also a weakness in the reserve currencies. So the euro in here rebounding at the beginning of last week and then setting back again, looking at more like a topping pattern in here right now. So we're seeing a potential topping there for the euro versus the dollar. So the reserve currency, the euro here, and also the pound also seen as a reserve currency. A succession now since mid-June of lower lows and lower highs, a far more negative tone for the pound in the short to intermediate term. Not just in here seeing as a casualty of dollar strength in here for pound dollar, but also pound weakness coming through given the concerns around those trade talks with the EU. Going to move on to the commodity markets now. We have seen oil dip back lower as stocks have dipped back lower in here. So a slightly more negative tone for oil, having been very strong in here over the past few weeks through June, making new multi-month highs. However, setting back in here towards the end of last week. And copper actually bucking the trend in here. Copper actually nudging back up to the June highs more recently, but kind of somewhat cautiously nudging to those highs. So resilient, but there is some caution in there, even though copper stays underlying firm. So a slightly different message from the copper market in here. So let's move forward and take a look at the week ahead, commencing the 29th of June 2020. Well, clearly the US COVID-19 cases are going to stay very much in focus with these spikes higher that we've seen in number of cases and hospitalizations, particularly in those southern and western states. So we're certainly going to be keeping an eye on those as we go through into the end of June and through into early July. And not just in the US, but also these outbreaks that we're seeing in other countries, and also with a focus maybe in UK and Europe as we continue to see lockdown measures ease, as the economies are continue to be reopened. Is that going to cause a spike higher in the number of cases, hospitalizations, and potentially deaths in here? Let's take a look at what's going on in the world of the central banks. Well, we have Powell is speaking this week, testifying to Congress again on Tuesday, alongside Mnuchin from the Treasury. And then we have the release of the Fed minutes coming up on Wednesday of this week. Moving on to the data, we have Japanese retail trade data on Monday, along with EU business climate and German CPI. Tuesday brings Chinese PMI data, UK GDP and EU CPI, alongside those testimonies from Powell and Mnuchin. We also have then market global manufacturing PMI and US PMI from the ISM on Wednesday, alongside the German employment report and the US ADP employment report. And again, as mentioned previously there, the FOMC meeting minutes are released on Wednesday. Now we get the US employment report this Thursday. Why do we get it this Thursday? It's because we have US Independence Day holiday is actually being observed this Friday, coming on Friday the 3rd of July. But on that day, we're still getting the release of the global market services and composite PMI data comes through on Friday. I'm going to say to you all, have a great trading week, and please do be safe out there. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.